Hello and Happy New Year from Option Investors. My name is Jukka Karinen and you are watching the Operation Small Account Growth Performance Review of Week 53, year 2020. The agenda is that we go through the action this week. We check the current portfolio holdings and how they're doing, and then we go through the results, which includes also benchmarking against the S&P 500. If you like the content, make sure to subscribe and maybe activate the notifications too, so you will know when we have the next one available. We added 2 positions this week. The first one is this Pinterest diagonal call here. The reasoning was that, well, Pinterest pierced the lower daily Bollinger Band and started bouncing, so I thought that maybe there's a sustained bounce going on, and then we continue upwards, which didn't happen, so now we are on loss in this position. Let's see what can happen in the 2 weeks that remain. The second position here is the semiconductor sector's ETF, so SMH. Calendar spread to 130. This has been a very strong sector lately, and it looks like it could continue to be. The trade is based on a technical analysis based trigger on the weekly time frame, which over the past 3 years has over 80% hit rate, 82 point something or 83 point something, I don't remember, but it's still a very good hit rate, at least for me. The new cash flow trades this week were here, so selling these calls and closing the 76 calls to December 31st, basically turns the diagonal spread into a vertical. I sold XLB calls for January 8th, which turns the long calls. I had a couple of different expiration dates into diagonal spreads. The short EBIX calls turns this into a calendar spread, so I have the June calls to 40 as well. MIK was turned into a diagonal, just like the XLC. So here's now 12.5/15 diagonal, and here we got 67 and 69 as the calls. As the strikes. Quite a lot of premium selling activity this week. The trades we closed were the short IJH calls for 53%, the Pinterest calls that were a part of the diagonal for 60% for the newer diagonal, and for the original 192% victory. For losses, there was none. So this goes against my plan from previous week, where I told that I will probably start taking off some losers. I didn't do that in the end. Instead, I decided that I will start just selling more premium, because I figured out that I can probably squeeze more money out of those that way than I can by closing them down at this point. For open positions, we have a ton. For the longer term, we've got the Beezer Homes calls plus 7%, down quite a lot from previous week. 1 week ago it was plus 35% almost. The EBIX calls plus 11%. Ford calls plus 15%, down from previous week. General Motors minus 12%, down from previous week as well. Turtle Beach quite a lot down from previous week, only plus 26%. Mattel very, very slightly down from previous week, 87%. MIK nicely up from last week, now on plus, previously on loss. And the Pinterest, these long-term options here, plus 140% down from the previous week's one, plus 184%. For midterm, we've got AMD, these calendar calls slightly down from previous week, still on loss. ELY from green to red, minus 7.4% now. IJH calls down from plus 53% down to 33% profit. And this Pinterest calls February very nastily down, minus 40% almost. Snapchat again down. XLB up now from red to green, XLC up red to green as well, and the new semiconductor sector up. Quite a red week. Not very happy about this. Let's see how this continues for the next week. There's still time on most of these positions to turn back up, and I hope they do so. For the short term, we've got the now vertical calls. One of the positions is plus 60%, the other minus 43%, both down because Pinterest dropped quite a lot. The XLB position, this one from November, minus 70%. There's nothing to win anymore by taking this off, so I'm just using this to sell premium against, and if XLB starts running, I can maybe still get something out of this as well. Cash flow positions, we've got the EBIX calls minus 30%, MIK calls minus 9%, XLB calls plus 7%, and XLC calls minus almost 40%. This looks bad too, but all of these are still well below the strike price. I'm looking to get somewhere between 50 to 100% victories on these ones. So this week I sold enough calls to basically boost my account's cash position by over 5% of the total account size. And for as long as my calls stay beneath the strike prices, that will be added to the account's profit over the next 2 weeks. So plus 5% over 2 weeks to me sounds quite nice. And in case the prices start really rocketing up, what happens is that these will become losing positions, but the underlying winning positions will win so much more that I'm very happy to take losses on these ones. Results for this week: a very nice drop from 7.3k down to 6.3k, or almost 6.4, but anyway, over 900 euros loss on paper. I didn't book any losses like you saw. The portfolio drop in percentages was 13%, maybe my worst week ever. And this is just something that should be expected. We use options, which are leveraged instruments, so the price that we pay for having those plus 20 and so 20% weeks is that now and then when we lose, we may lose big also. S&P 500 gained 1.3%, so I very, very strongly underperformed the index. The total 12 weeks, we have almost, well, slightly over 82% success rate in closed positions, so quite nice. Portfolio growth slightly under 50%, out of which 5% growth came in December. S&P 500 grew 8.8% in the same time and 3.26% in December. December for us was clearly not a great month. We outperformed the index, but not by very much at all. The performance graph will show here, so we are on the orange, S&P 500 is the blue line. Our October was slow, November was really, really good from here to here, and then December was really, really shaky, and in the end it didn't really move anywhere at all. The trend is still okay. Looking for this to start trending back up, hopefully, as January starts. Our investing method, in a very, very short format, is that we look at the sectors first, check which ones are outperforming the rest, then we do fundamental analysis for the best companies within the outperforming sectors, with the idea that rising tide lifts all the boats, and it lifts the best boats more than it lifts the not so good ones. We use technical analysis for timing the trades, and then we keep risk in control as well as we can by using options. We use good option strategies to keep that risk under control and also to maximize our upside potential, and then we trust the process and relax. So if you saw this maybe slightly provocative thumbnail of this video, you may see from my face that even though the week was a 13% loser, I don't feel stressed at all about it. It belongs to the game, and well, if that starts repeating 4 or 5 weeks in a row, my face will probably start looking much more like the dude on the thumbnail, but I'm trusting that this will not happen. Of course it could, we never know. If you want to learn more about us or our investing strategies, you can go to optioninvestors.club and hopefully you find your answer. If you don't, you can reach out and see if we can find those answers together. My name is Jukka Karinen, and I'm wishing you a very, very profitable trading week. See you around and chill out.